Hi again, welcome and thank you for joining us today. My name is Yana and I'm the Marketing Director. If you've joined this webinar, chances are you need to optimize your Oracle FCCS application. Early FCCS adopters faced key issues with application implementation, as you may have been trying to replace HFM. So our team has fixed a lot of these broken implementations. And what we've noticed is a few common issues that make the system dysfunctional and outdated, and they obviously reflect on your accounts and closing accounts and things like that. So our firm and our team, US Analytics, is here to empower the finance office to drive strategy and picture results. We're a leading professional services firm with over 20 years experience, focused on various EPM and analytics solutions, serving corporate finance office teams nationally. So our seasoned teams are highly technical and functional, and we pride ourselves on being an aligned strategic partner with our clients. I want to present our speaker today. This is Nair Ellis. She is a CPA. She is our practice lead for financial close and consolidation. She has a lot of years of experience under her belt with EPM and financial reporting and financial consolidation and close. She's really, directly been in your shoes, so she knows and understands the pains that you might have been dealing with when it comes to these applications and optimizing these to work for your teams and your systems. And without further ado, I'm going to turn it over to Nair, and she can take it away with the agenda that we'll be covering today. Start talking about how to fix these broken FCCS implementations.
Hi guys. So we are going to talk through some of our experiences around early adopter FCCS implementations. So I'll just talk to you some about the common issues, as well as some of the lost opportunities we've seen. And then we'll get into a little bit of technical detail. We're going to try to keep it high level, but we'll still get into some of the, the metadata properties and rules, some resources and implementation guides, and we'll go through a couple of our client success stories, just a high level rebuild, reuse, debate, and then as well as considerations for migration. And then we'll of course open up the floor for any questions that you may have. To start off, let's talk real quick about kind of some of the common issues we've been seeing with these early implementations. This when it was first introduced, it was, a new technology to everyone really. So implementers were a little bit weary of using the FCCS pre-built hierarchy structure, and that's not limited to any one dimension. There are 11 seeded dimensions, and now they allow for 4 customs. For the legacy environments, there was only the allowance of 2 custom dimensions. But within those 11 seeded dimensions, there were some seeded members as well. And it seemed like a lot of the early implementation experts were avoiding using those, which led to performance issues and inconsistent or incorrect behavior. We also saw the tendency to want to do an HFM lift and shift for those companies that were coming from an HFM environment. But because it's built on a different technology, doing a lift and shift from HFM is not ideal. The properties were incorrect. Some of the rules were just carried over verbatim. Of course, rewritten for Essbase scripting language, but in essence, it was brought over verbatim, and that didn't essentially work for FCCS. A lot of the metadata properties were set up incorrectly because, again, this is a different technology. It works different from HFM or other technologies that might be out there, and so the way you might think it should work, or the way you think it should be structured, it was not necessarily the case for FCCS. So you really had to dig into Oracle's guidelines in order to understand how to properly implement the product. So, you know, in general, it was just there's a lot of unfamiliarity for implementers, and therefore they didn't use best practice. They bring over a product in the way that they thought it should be, and cause a series of setup issues that then needed to be band-aided. And you should never walk away from a brand new implementation with band-aids. That's just evidence that there is the best practices aren't being used. So we've seen a lot of that. We've worked with a lot of that. And right here, I've got an illustration for you with a couple of snapshots from within an FCCS application. So here you can see a lot of the FCCS setup was done out of the box for you, so that it kind of drove clients and customers to use best practices and have a consistent application, consistent use and setup of the application. All of their dimensionality is seated with the FCCS underscore, like you see on the screen highlighted. It was there for your use, so that the rules, the pre-built rules that Oracle has developed for this product, can run off of their seated members. So when implementers were coming in and unsure what to do with these seated totals, there was a tendency to build alternate structures. So instead of using the FCCS underscore balance sheet, in this case, they built a sibling to it and build out a client's GL structure outside of the FCCS balance sheet. So at that point, they've lost functionality, because now they have rules that they need to build in to have the application perform as expected and have the totals roll as expected. And here we've also just got a snapshot of the data source dimension. That's another one of the 11 out-of-the-box dimensions that are provided with FCCS. And again, there was a tendency to try to go outside of that or build alternate structures, which there may be a legitimate case for alternates or situations like that. However, for your main financial GL data that is coming into the system, it is best suited for clients to be using these FCCS pre-seeded dimensions. And like I said, the second you kind of waver from that, you have now complicated and potentially put your application into kind of a risky situation, because the other thing that happens is whenever the monthly updates run through the application, Oracle has set out there as a disclaimer, if you're using things outside of the seeded functionality, if you're building in your own custom items, which they've given you the flexibility to do, well, it could revert or get wiped during a monthly upgrade. And I've seen that happen to several clients before. Another one of the things I've noticed a lot across these applications is the lost opportunities. And right now I'm going to focus on the movements dimension, which essentially builds out your cash flow statement. So the cash flows it's a statement that is needed. It's a universal statement that's kind of needed across the board. You know, you have your standard set of financial statements that include your balance sheet, income statement, and cash flows. Well, you know, building out a balance sheet and income statement is pretty standard. Everybody does it across the board. And then you tend to see most people trying to build cash flows in Excel or doing some format outside of the system, or trying to do it in the system but not necessarily successfully. Well, it seemed like, especially with the early adopters, that the movements dimension was not being leveraged. This dimension was provided by FCCS to build out a basis for your cash flows with pretty minimal effort. So when you're setting up the application, you have your balance sheet accounts being mapped over to your movement dimensions, and building it. And just in doing that and doing your initial setup through data management, which would be like the FDME equivalent in the cloud, you have a good foundation for your cash flow statement. I like to say ballpark, you're 75% of the way there, just in pushing data into the system by leveraging this movements dimension. Now, to get you to a fully automated, completed cash flow statement, there's some additional steps that you need to take. And I've seen companies kind of take it both ways. I've seen companies that like having their initial foundation built out for the cash flows and extracting that from the application and doing the remainder in Excel and reporting from Excel, and that's just their preference. And then I've seen clients who want to have it fully automated. So after you've got that initial setup in there, building out some rules and formulas to automate the remaining items for your cash flows, which are generally your non-cash add backs to your operating section. So having even a partially built, and definitely if you've got a fully automated cash flow statement, I mean, that's a huge win for accounting, because that's the cash flow statement from, my experience across several companies, whether I'm on the preparer side or on the reviewer side or as an implementer, I've by far seen the most struggle and most time spent in cash flows reporting. So, which is understandable considering what it entails. But why not leverage the system to do that? And that's, again, one of those things that the early adopters, I feel like, have really missed out on. A lot of the applications that I've seen from an early legacy implementation, they do not use the movements dimension at all. Or in some cases, I've come across where they've used it incorrectly, and it required revising and reloading. So it just, it's like I said, a huge lost opportunity, especially with those initial implementations. And it was just one of those unknowns or unfamiliarities for implementers, it seemed. And there's actually, even within this movements dimension, some people take it one step further and build out their roll forwards within the application as well. So I've had several clients where we've implemented all their roll forwards within the application, so that can just easily be extracted as well. Which, again, huge time saver, especially come quarter end, crunch time. It has saved a lot of hours and left more time for accountants, analysts, reviewers to just actually take a look at the values coming out of the application and assess the validity of them, as opposed to just trying to compile them. Another item that we've seen is just incorrect metadata properties. So, understanding the properties has a huge impact. It can be as simple as performance, or it could even lend to incorrect values coming out of the application or inconsistency. for instance, adding something in as a custom rule could be done better as a member formula, or vice versa. Or just understanding when to use dynamic calculations versus a stored value. So that, those are kind of the basic properties of the application. And even when you're writing rules, you don't have free range. You have to stay within the FCCS unrestricted values. There are some FCCS restricted values, and again, that's to help clients and end users stay within best practices. But even so, there's a lot of flexibility around rule writing, but you have to understand how to write the rules and how best to structure an environment so that you're not taxing the system. Another big thing is that not all dimensions can handle alternate hierarchies as well as others, or even dynamic calculations. While you have the ability and option to do it, it's not necessarily best practice. And those are the types of things that a lot of the early implementers and early adopters kind of suffered through. Just not understanding why, while technically, yes, I'm getting the correct value, why does it take 45 minutes to get there? It shouldn't take that long. Things like that, and not understanding what in the setup has triggered that. So again, just really critical to understand the technology of FCCS and how to work with FCCS and all of its seeded values to still get you the end results that you need, but get you there in the most efficient manner. And that was lost on a lot of early adopters. Kind of getting into some of the rules. Most of the general rules that you will need are pre-configured in FCCS. All applications across the board need to consolidate data. They need to aggregate it up. They need to be able to view their consolidated totals as well as their consolidating values up the entity dimension, as well as being able to break out intercompany as well. So that's standard functionality that is needed across all industries, all clients. So that is something that FCCS has pre-configured for you. Now, that being said, again, you have to take advantage of the seeded values in order to do this, and doing so will lend to more simplified consolidations and minimize the number of custom rules that you might need. I've had clients in that range in all levels of complexity, where some don't end up with an implementation with 0 custom rules. Everything is able to be built in through member formulas and through the seeded values and the pre-built functionality. And then I've had some that have layers of complexity that require them to do additional rules, things like that. So there's not a right or wrong, it's just going about it the right way for your particular needs. So making sure you're using member formulas when applicable, using insertion rules to reduce consolidation steps. And insertion rules are the pre-configured out-of-the-box consolidation rules that are provided by FCCS, that you can go in there and you can modify and edit so that every time you kick off the standard consolidation rule, it also runs the custom rules that you need. Sometimes that's the most efficient manner. Sometimes it's more efficient to break it out into its own rule. It's, again, a case-by-case basis that needs to be evaluated. So just knowing when to use which version, or when to use which type of option in order to best get you the most efficient results. So there's, I kind of hate this saying, but there's a lot of ways to skin the cat. So you can get, you can still get the end results you need and not need to bring in all of your HFM rules and just, rewrite them for the Essbase scripting language. It's just, that's most of the time isn't necessary. And actually, in most of the implementations or reworking of applications that I've done, I've ended up scrapping the majority of the rules that are built over in HFM because they're simply not needed. They've already been factored into the pre-configured rules provided by FCCS. So again, it's a matter of taking the time to evaluate what rules are there, what you actually need from it, what end result you're trying to get at, and how can we get you there in the new technology. And then, some of the cases there are some cases where people use rules to add in statistical values or additional, compile additional information that's outside of your regular GL data. You can do that in FCCS as well, or you can even, rather than using rules for that type of thing, you can even take advantage of the supplemental data manager, which is an additional feature within FCCS that it comes with the application. It's not like an additional add-on or anything, but it's just a feature that's available to you where you can add in data that is outside of your regular GL data and have that additional information too. And there've been, like, an example of a use case is where I've had people load in AR aging and they want to calculate the days outstanding and all of that from their AR aging schedule. And so they did that. And then what they also did is they took the total value, so their total AR balance, and validated that against the GL. If that value did not tie, then you got an error message. So there's even the ability to validate against and tie back to your GL data. So you can, again, all of this you can do without rules. You can use the pre-configured items within FCCS to attack the same needs and address the same needs that you might have. And I can't stress this enough, having the right resource is critical to a successful implementation. Especially with the early adoption of this product, there was a tendency to put a pure HFM consultant on an FCCS implementation. But that simply doesn't work because the underlying technology is different. So having an HFM consultant come in to an FCCS environment would not be able to set the configurations as needed, and which is why I've seen a lot of the common mistake of attempting to do an HFM lift and shift over to FCCS, and it just, the project going sideways. You also can't put like a pure planning person into the application because typically a pure planning person might not understand the HFM rules and environments, and so they might have the right technological skills for FCCS, but even so, they still will not understand the correct properties needed for an FCCS environment, and they don't have the business or functional understanding for consolidations and intercompany eliminations and some of your typical other close and consolidation functions. So really the best combination is to have someone who understands both worlds. So really understands the FCCS technology, really understands the business function, and being able to come in there and give you the successful implementation, be able to advise you on what you need. Every implementation should have on the front end a level of advisory services that comes with it. And if you don't understand the business and if you don't understand the technology, you cannot be an effective advisor. And so that's something that US Analytics is really big on. You need to have someone come in and advise you on best practices, advise you on what the best way to get to the outcome that you need as a client. I'd like to go through a couple of real world examples that we've encountered. Just going to keep it to a couple in the interest of time. So one of them is Elkay. When we were first introduced to and engaged with Elkay, their application had 8 steps to go through in order to, after they've gotten the data in, they've got it loaded, then there was 8 steps to take before they could ever see the ending results. That's just too much time. You should not have to take that long to run through it. So you shouldn't have to do that many steps, and it should not take that long. The application really had become unmanageable, and almost their entire structure was outside of the hierarchy, by which I mean the seated members that we've been talking about. And so ultimately, there was parts of it that would not even calculate properly. And then they had several unnecessary custom rules that were brought over from HFM, and the reason being is they were trying to account for the fact that they've got so much of it outside of the hierarchy, or that they weren't taking advantage of or molding it to the new FCCS technology. They were really trying to just lift and shift. So we came in, we revised the properties that were wrong across the board, across all the dimensions. We just took a thorough review and fixed any properties that would lend to the poor performance as well as the incorrect results. We worked with the client to rebuild the dimensionality in a manner that was functional and efficient. So they had all of their cash flows built outside of the FCCS movements functionality. So this is one of the clients that wanted 100%, but they went about it in a very clunky manner, which was taxing for the system, and an additional couple of steps that needed to be taken for their consolidation process. So we were able to scrap, actually in this case, we ended up scrapping the entire application and starting over, rebuilding and reassessing every single dimension, and redoing every dimension to the extent needed, reducing any GL or other metadata members that we could. They had a lot of their GL values, their GL accounts outside of the FCCS underscore balance sheet dimensionality, especially more so the income statement. So we brought that back up, and any additional calculations or summations that they needed, we also built within the FCCS underscore balance sheet. And then we were able to then get their retained earnings to roll without a rule. We were able to get write a very simple rule to calculate those summations and then back out the values that went into their summation so it wasn't double counting their operating expenses, and then get them to the correct net income values. And after doing all of that, we were able to bring their consolidation process to 2 steps. One was a business rule to kick off the consolidation, and one to run the translation. And currently each of those runs in less than a minute. So if you think about it, 2 minutes tops, once you've loaded the data, it's just, that's it. All your values are populated as needed. So, you know, again, when you factor in all the 45+ minute consolidations and all the other things that they had to run, you went from hours to 2 minutes. That's significant, especially when you're talking about, you know, 11th hour trying to compile your numbers. Big difference. This particular application is still being configured to add in some now they're adding in planning and linking that up to their FCCS and having comparative reporting and all of that. So they're still an evolving client, but having just that piece, that structure completely revamped and rebuilt has been tremendous progress for these guys. Another client we've worked on recently was Battalion Oil. They had some inefficient custom calculations that they had written out. They had the incorrect setup of their movements dimension. Again, you know, that's, like I said, that movements dimension seems to be a problem I see in one form or fashion across like almost every early adoption implementation that I've seen, and even some of the current ones, but more so the early adopters. And they had custom dimension that was really bogging down the system. So we came in and evaluated it. For these guys, we didn't have to completely scrap it. For these guys, we rebuilt it, what they had in existence already. They had performance issues and they had data issues, but again, it was the application was salvageable. So we decided to use what they had and work with it. They had some inefficient data mappings and incorrect data mappings into the movement values. So we went in and we fixed all that. You know, another one of those just kind of the best practice type things that, you know, we like to do is keep all the mapping dynamic so that they don't, so that's, it's not a maintenance nightmare. So we went in and redid their mapping, even though it wasn't technically wrong, it was just, it created additional admin processes that needed to be done. And it really shouldn't have to be done that way. So we went in and we fixed that, as well as, like I said, the movements was incorrect. They were mapping it all to one movements member, which you cannot do. At minimum, the income statement and balance sheet needs to be broken out, and so these guys did not want to do the cash flows from FCCS, which is fine. So we did the minimum. We broke it out and got them to the 75% point, and from there they, you know, they do their cash flows reporting as they see fit. But even the initial setup was just plain incorrect, and it was leading to issues that you don't see month over month, but when you roll the year, you started to see an issue. So we went in and we fixed that. Their custom calculations had a pretty sizable impact on performance. One calculation was removed altogether, and it was replaced with member formulas within the account dimension. They were better suited for that, and it released system to be able to redistribute its powers into running consolidations. And then with the other rule, we took it out of, in this case, we took it out of the insertion rules, and that the rules that automatically get initiated when you run the consolidation, and we took it out of there and we put it into an on-demand rule. And so they only run it quarterly and can initiate that whenever they need. And actually, in doing so and creating it as an on-demand rule, it picked up on performance as well. So again, consolidation down to minutes. And even when they need to run the on-demand rule, that runs in less than a minute as well. And their custom dimension that was overtaxing the system went from 11,000 members to less than 1,000. So that's where, again, the advisory services come in. Okay, let's take a look at your custom dimensions. The 11,000 is really hurting your system. What can we do? How can we rewrite this to still get you the results you need, but not tax the system? So we sat down, we talked about it, and we presented them with a couple of options and let them decide, okay, which of these paths do you want to take? There's multiple ways we can go with this that can still help you with your system and your performance, and which direction do you want to go? So again, here, you can rebuild or reuse. It's not always the case where we have to scrap and start over. So, for those of you guys out there that have this issue, you have an early adopters legacy version of the application, you can continue to use that, and it can still be rewritten and revised and salvageable. And then again, there might be cases where it might need to be scrapped, and that's okay too. But it's, we like to come in and evaluate and advise and provide you options, and empower you with the choice of which path you want to take, and kind of, again, we'll advise you otherwise. And then, there's cases where you might come back and offer a pathway that we didn't advise or something like that, then we'll work through those as well. Or, sometimes it's like, oh, well, we didn't think about this situation. How can we throw this into the mix? And so, a very collaborative approach, and in where we're giving you guidelines, the goods, the bads, the pros, the cons, and letting you make the decision, and then working with you, partnering with you, as opposed to telling you what to do. So again, not all early adopters are doomed to re-implementation. In the two cases we presented, one was a reuse of the application and one was a rebuild. So we could take either approach. Just, general, best practices, considerations for migrating. As the client side, you need to have an overall vision and, be ready for cloud readiness, having that approach to taking that leap over to cloud. And then from there, we can come in and advise and help. Functionality trade-offs, depending on what application you're coming from, there's really I've not come across an FCCS implementation that could not successfully go through because of lacking functionality. There was this long time comparison of HFM to FCCS, and all the, especially when the FCCS was first released, there was these comparative sheets of what FCCS can do and not do yet. And for quite some time now, we have far surpassed what FCCS can do versus HFM. So all the functionality is out there. It's just a matter of knowing how to use the features within FCCS to give you the functionality that you need. And in current implementations and current times, it's really a quicker implementation timeline for FCCS. I've done several comparisons recently with clients who are considering an upgrade versus making the switch over to cloud. And along with their upgrades, not just a simple upgrade of technology and upgrade of current functions and features, and getting rid of the "it's always been done this way" kind of mentality, and coming in with okay, well, this is what we really need from the system, so we need to revamp our current application to be able to do these things. So when you compare the timeline and cost of doing an upgrade and kind of a revitalizing facelift of your current HFM application versus doing an FCCS implementation, the timeline and the related cost tends to be cheaper to go over to FCCS in terms of the implementation itself. So it's really great. So something to keep in mind if you're not one of the early adopters, if you're just considering the technology in general, that's something to keep like in the back of your mind. And again, with all of these, the cloud ERP model that Oracle has, where when you're getting into the enterprise Oracle cloud suite now, as no longer as an early adopter, but now as just a current a new user, you're getting ARM planning, narrative reporting, tax, all that stuff, and the integration and migration between all these applications is very easy, and it's very seamless. So again, something else to just kind of consider. Okay, I will like to open up the floor for any questions that we might have.
Thank you, Nair. Yes, please populate them in the question box below. Linda, yes, today's presentation. Oh, I think you asked this earlier. I'm sorry. So yes, populate any of your questions below. We actually had a few people email their questions in. One of which was, how long does a typical rebuild take if you were going to go that route? Nair, if you want to speak on that.
Yeah, so I hate to start off with the "it depends," but it really kind of does. Some of these can be as quick as just a few weeks. We come in and do an assessment, and that'll typically take a couple of days, and then go through your options with you in terms of improvements and outcomes of your assessment. And then depending on how many items may have come out of that, it could just be, if we're just rebuilding what's already existing, it could be as quick as just a couple of weeks turnaround.
Awesome, thank you, good deal. The other question that we had emailed in was, how would you approach, or where do you start if you're just in the thick of it and are overwhelmed? Like, where is the good starting point?
So we like to, again, come in and just do an overall assessment and then advise you from there. So a lot of times, really the kind of the quick wins or the best place to start ends up being just looking at and assessing all of your existing metadata and the related properties. A lot of times, just coming in and looking at those things and advising you through those and making the related changes with those can be kind of a night and day type difference. So that's, if I had to pick one place that we would start, that would kind of be the place to start. And again, with some come in and advise you on kind of best practice approach and making sure that we are, every step of the way incorporating best practices for you.
Great, thank you. Okay, anyone else have any questions? Any other questions before we wrap this up? All right, I don't see any others. So I want to thank you all for coming today, and Nair, thank you for presenting on the topic. I wanted to remind you all that we do have a last closeout webinar on this 3-part series that is going to speak on Oracle ARCs specifically and improving and speeding up close with Oracle ARCs. Our very first webinar covered the combination of Oracle ARCs and FCCS, and then we kind of did a deep dive into remediating FCCS today. And we will reintroduce Oracle ARCs in 2 weeks. So all of these webinar decks will be sent out to you. The replays will be sent out to you. So no worries on that. And yes, please register for the upcoming webinar in 2 weeks. So if you are interested in a complimentary assessment, and for those that answered that they're interested in some of the questions that we asked, we'll be reaching out to you. And if you need us to come in and just assess kind of your application stack and just advise you on some options that you may be facing, taking again into consideration your immediate needs and also your long-term needs, that's really important as well. Our team is really great at doing that. So by all means, please reach out to us. We're here to help. And again, thank you, Nair, and thank you all for joining us today. We'll see you on the next webinar. Take care.